Welcome, everyone, to Managing an Options Portfolio webcast. I'm Connie Hill. So glad to see each and every one of you here today. Want you to feel welcome. I am joined in the chat by Ben Watson. You guys probably know Ben. If you don't, you should. A fellow friend and colleague and coach. He is here to help assist with any questions that you might have. Now, today I wanted to introduce you to two tools that can help you as you're trying to do a couple of things. One, visualize your trades and track your trades. Obviously, something that's going to be important to somebody who is trying to manage an options portfolio. I hope you're following me on X. I'm Connie Hill CS. Ben does a lot of great posting as well. He is Ben Watson CS. And as we see things in the market or charts or things that we find interesting, we'll go out there and post about it. So it's free to follow us. Would love to have you come along with us. All right, let's go through our disclosures and get down to the business because I've got a lot I want to cover with you today. Options carry a high level of risk and are not suitable for all investors. Multi-leg option strategies will involve multiple transaction costs. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. It's provided for educational purposes only. It's a fantastic tool as you're trying to learn strategies, maybe learn the Thinkorswim platform, use it on the paper side of things till you get that comfort level there. Paper Money virtual trading application will not assign a short options position early. That's important, especially in this class, because we do some short option selling. We'll try to point out those things as they occur in the portfolio. Past performance is no guarantee of future results. Now, we've got a lot of friendlies out there today. We've got a lot of new folks joining us. If you're somebody that is new joining us, we invite you to come and join us live every week at this time as we discuss this particular idea of managing your options portfolio. Typically, in our agenda today, we're going to just go take a quick look at the markets, just because that gives us an idea of how we're going to frame things up as we're looking at our positions that we're trying to manage. And then we're going to be looking at some new examples here as well. So let's get to it. I'm going to hop over here, over to my Thinkorswim platform. I've just got the SPX chart up here. Your chart might look similar. You might do something completely different with it. Basically, I've got a 10-period moving average. That's the blue one, and it's actually an exponential moving average. This red line is a 30-day simple moving average. So they give us an idea of what is the short-term trend doing, what's the intermediate trend doing, and both of them obviously going bullish. We've got the RSI, gives us an indicator of if things are overbought, oversold, who's in control, what the sentiment is, and it's headed up. Now, it's not above 70 yet. That's when it gets into its area where we say, yeah, buyers are definitely in control, but it's steadily moving up that way. And we can see by the trend, yeah, the SPX has been pretty strong. Now, most of the indexes were down a little bit early. Looks like they have all recovered, or mostly, I should say, mostly recovered here. NDX up about 0.17%. So it looks like the market has bottomed off its lows. We'll want to take a quick look at the VIX. This gives us a gauge of volatility in the market. And when the VIX is high, we see a lot of turbulence. We see a lot of maybe red numbers on the screen. But when volatility is at a lower area, we don't have a tendency to see that so much. And so you can see just more recently here, yeah, the VIX has been dropping. It looks like maybe it popped a little bit earlier today and has dropped back down as kind of the volatility in the market is starting to play itself out. Now, I mentioned to you there are two tools I want to share with you to help you monitor your trades and track your trades. So we're going to get into that first tool right off the bat here. It's called the Risk Profile tool. And it's something that you have on your Thinkorswim platform. Now, I'm going to bring up a chart here. We're just going to take a quick look at it here. We are going to look at Datadog. Now, Datadog is having some nice movement today. In fact, you can see I've got a horizontal line here. Looks like, man, today it is breaking above that resistance area pretty strongly. Volume is down here, and I'm going to maybe zoom in here so we're getting an idea. That yellow line tells us where the average volume is. And so it's almost up to average volume, yet we're pretty early in the trading day here. So that's an indicator that, yeah, maybe institutions and others are moving in on this. For a trader, being able to identify a good entry point is going to be one of the first things they're going to want to do as they're going through a watch list. Hey, do I have an entry signal here? So some traders like to use a breakout as an entry signal. And this idea that resistance was up here about, let's call it 144 or so, it should act as support for the stock going forward. Now, I'm going to just look a little preview. We're going to give ourselves maybe a little bit more time here on our time axis. Okay, we do have the 20 bars. I like to see a whole month's worth of trading out there because that lets us see any symbols out here that might indicate that a stock is getting ready to go through earnings. You want to be aware of that when you're getting into a trade. Now, let's go ahead. Some of you might look at this and say, yeah, it meets your entry signals, or it doesn't for whatever strategy you're interested in. We're going to say that it meets our entry signals for doing a short put vertical. Now we're going to head over to the trade tab. And one thing that's nice about Datadog that has a lot of activity, we see some weekly options here. When we see those weekly options, they may have enough liquidity for us to pursue, and sometimes they don't. This one right now, we are just going to go out to the November 21. As I poked around in the weeklies, there wasn't a ton of open interest. And those of you that like to trade a lot of contracts at the same time may find it difficult to be able to find some strike prices that really work for you. So in my columns here, I am going to just kind of point out what we've got. We've got our delta. We've got whatever the open interest is, volume today, and then this column here, probability O, stands for probability of the option expiring out of, or probability of the option expiring out of the money. Okay, so when we're seeing those values, that can be helpful to us. Now, as a trader, one thing we may look at that helps us identify, well, what strike might we want to sell is we might line ourselves up here with the delta column. Sometimes traders like to sell a delta, a 30-something delta, sometimes a 40-something delta. Some may feel comfortable with a 20-something delta. In this one, what we're looking to do here, let's take a look at, say, on this one, let's look at 140 and 135. All right, we can see, yeah, there's decent open interest out here. That leads to tight spreads between the bid and the ask price here. So 645 by 665, there's a 20-cent spread there. So looks to be very efficient for us. All right, let's go ahead. Let's just do a sell vertical. Bring this chart up here. And looks like I'm going to go ahead and lock this value in. It looks like we would have a maximum gain here of 162 and a maximum theoretical loss, $5, which is the difference in the spread, and $1.62. Says, okay, we're going to have risk of about, we'd be risking $338. That would be our max loss. Okay, so I'm just going to type these numbers here off to the side, and we'll put in our 162 as our max theoretical gain. Now, the tool I'm going to show you here is really helpful for those of you that are visual learners and like to kind of conceptualize things visually. We're going to take this particular trade. We're going to just do a right mouse click on it anywhere, and we're going to say Analyze Trade. And as we do so, it's going to bring it over to this screen where it says Analyze Risk Profile. And then there's some fields here that we are needing to see. Now, I just switched up one thing just now, and that was what do you want to see? And it was saying show all. And in reality, I don't want it to show any Datadog positions I might have on right now. So I changed it to say hide positions. So we're just seeing this trade that we might be anticipating and want to check out here. Lewis wonders, when I talk about max loss, does that include assignment? It does not. Okay, and it does not include any commissions or fees. Okay, just kind of the straight numbers, how they might be. All right. Some of you might be familiar with this tool, and I'm curious if you are familiar with this tool. Go ahead and put it in the chat. I'm curious to know who maybe is familiar with it and maybe who is like, I haven't really seen this before. And I'm going to show you what we've got going on here on this chart. So let's start out here. We've got our ticker symbol in that upper left-hand corner, and then the trade, we just kind of talked about it. It's represented down here at the bottom of the screen. We can see our $1.62 credit here. Now we've got some interesting lines. We have a blue line and we have this pinky purple line. The blue line gives us an idea of what the profit and loss would be at options expiration. Okay, so we can see here, gee, on this blue line, we can see, yeah, that's our max loss. We calculated that would be 338. And sure enough, if we come down in this area and just come along this line here, yeah, it's showing us down in this square, that kind of teal colored number. Yeah, that's letting us know what the value would be at options expiration date. Now, the line going from, say, our max loss up to here, that's going to be a partial loss. And you can see right here is a 0. This is basically our numbers, our profit and loss. Are we making money? Are we losing money if the stock goes to a particular area? And then we can also see as it maybe gets up to this area, it doesn't go any higher. Okay, that is our max theoretical gain. That's where our 162 is. And so we can kind of see how that works. Now, this purple pinky line, it measures something different. It measures what is the probability of the trade based on a date down here in the bottom right, which is set at today's date, but we can go in and play with that and change that and make some different assumptions. Now, as I'm checking out here, looks like we kind of have a mixed group. Some of you are saying, man, I use it daily. I use it all the time, which is fantastic. And then there are going to be some others of you that are like, no, this is kind of a new tool to me. And you'll want to take some notes. And I'm happy many of you have some exposure here. Some Charles is just saying, yeah, kind of somewhat. And I'm going to tell you, if this is the first time that you've seen this tool, you might not capture everything I'm saying. In fact, when I first saw this tool, I was like, man, I need to see that 2 or 3, 4 times before I can really conceptualize how to really use it in my trading. Now, there's some areas here I want to point out to you. Up here in this upper right-hand corner, there's a date that says October 4th. In reality, we want that to reflect our options expiration date. That's going to be November 21. So we're going to go change the date here. We're going to click on the down arrow, or actually it's a little calendar there. We're going to nudge over to November. We're going to come down here. And what you want to do is pick the Saturday after the options expiration. Okay, so that day after, usually it's a Saturday. We want to put that in there. Ooh, that changed things a little bit here. In fact, I'm going to kind of, what I did is I'm just clicking and dragging below so that I can see this gray shaded area. I want to be able to see all of it. What is that gray shaded area? Well, it's letting us know what is the, if we had a bell-shaped curve, the probability of options expiring at 1 standard deviation from the mean. You're like, holy cow, Connie, statistics was a long time ago, and it certainly was for me as well. And so just kind of in a nutshell, a bell-shaped curve basically just kind of plots data points for us. So we have the mean running down the middle, and then we have some distance. And it might look something like this. Now, I'm not the best drawer, and this is not completely to scale, but I'll give you the idea. You know, from here, maybe over to here would represent 1 standard deviation of the mean, and that represents about 68.27% of the data points and where we would expect them to fall. Well, would you say 68% is a minority or a majority? I'd say it's more of a majority. Right? Many traders, when we're looking to put something as far as favorability in our favor, will say, let's look at something above 60%. The name of this tool is called the Risk Profile Tool, and we are getting it from being here on the Analyze tab. That's where you can find that, Mike. Mr. Luck, Professor Investor, is it possible to see expected move on the Analysis tab? Well, we can put in assumptions, like if we think the stock is going to do what, and we can go in, we can plug in some numbers. We're not quite to that yet, but yes, you absolutely can do that. That's one of the valuable things that you'll see here. So this gray shaded area, I didn't draw my bell-shaped curve very good, really represents this one standard deviation from the mean. Okay, I drew it a little too shallow here on this side here. I really needed to start it over here. So maybe if I fix that real quick. All right, maybe the bell-shaped curve more accurately would be over here where that shaded area is. All right, so that we're coming up here and we're getting those deviations from the mean. So basically the majority of the data points. Now, we've got down here, show you another area. I mentioned that this pink line is going to be showing us our profit and loss based on a date. And right now, maybe let's put a square around that. I've got it set to today's date, but we can change that. But let's look at some of these basics here first before we kind of go into the details of the risk profile here. One thing that's really helpful for a trader to see is, well, where is my break-even point? What are my probabilities of a break-even versus not? And so down here, we're going to see in the little area, you're going to click on this menu button here. Okay, so it's the three dots and the three dashes. That's our action menu. Select on it, and you can say, let's set our slices, which is just these vertical dotted lines. We'll end up with this one here. We're going to set it up to our break-even point, and we're going to set it up to the expiration date. Okay, we could go clear to there to see, okay, what are our probabilities as of October 1st in the trade setup that we're looking at here. So this, what it ended up leaving in here in our graph is what we call the price slice. And we can set price slices for a lot of things. We could set it for up 10% or down 10% or 5%. We could set it up for one standard deviation, two standard deviations. I mean, there's a lot of things we can set it up to, but just knowing probabilities at the option expiration is really helpful. And so we have two figures that might be a little bit difficult to see. I wish I could kind of brighten them up, but they're kind of in this kind of dim orange color, but this says 35.55%. What does that mean? Well, it's telling us there's a 35.55% chance that the price of the stock by options expiration date is going to be basically on this side, all right, this side of our price slice, which just runs right here. Okay, well, what does that mean? Well, it also means that we have a 64.45% chance that this stock will be in a price range where it means success in the trade, right? And so partial success on the trade would be the slanted line here as it goes up from our break-even point. And then, of course, we already talked about this is our max gain. It's not going to get any higher. It's not going to do any better than our 162 per contract. Okay, so those of you that are kind of visual people, sometimes this can be really helpful to you. If you're not a visual person, you might need to see this a few times before it really sinks in, before you're like, I can see how I can use it. We're going to use it in a couple of illustrative ways here today. Let's go ahead. Let's clean our drawing up here a little bit. Cindy says, what was the reason to change the top date to the date of expiration versus leaving it as today's date? Yeah, great question there, Cindy. The reason we want to change that date is because we want our blue colored line here to key off of that, because that blue line shows us what our profit and loss scenario is at options expiration day. Okay, so this blue line is like, okay, if we're down here at 130 at options expiration date, we're going to be sitting in a max loss area. If it's above here, coming over here in this flat line, that's letting us know that we're at a maximum gain at that point. And so we want that blue line to be triggered off of options expiration. And then down here where we've got today's current date, we could run some scenarios here. Let me get rid of my little yellow there. Let's click on this calendar. So for example, remember that figure is 64-ish, and this one's 35. Okay, well, I should say could round it. And let's suppose we say, well, let's go past today's date. Let's go out, say, 3 weeks. Let's go out to, say, October 24th. Okay. Whoa, the percentages changed a little bit. Okay. Because we've had the passage of time. So we've had theta decay working in our favor. And the percentages changed quite significantly over those 3 weeks. So now the probability of success on the trade is about 70%. And when I say success on the trade, it means making anything from 1 penny up to the max gain. Okay. And now there's only a 29% chance of having either a partial loss or a total loss on the trade. And so you can plug some different variables in for that. Gil wants to know, how do I zoom in and zoom out on the chart? There's a couple ways to do that. Number one, down here at the bottom, it goes from 110 to 190. And you saw me kind of click and drag. So I've got my mouse down, I'm holding it, I'm moving it to the right. That's going to kind of stretch out what we're seeing here. And then if you want to recenter what's in the middle part, just put your mouse anywhere, click and drag, and it's kind of called a panning thing, where it puts this in a spot that maybe is a little bit easier for us to see. Okay, so typically what I'll do is I'll start down here with the value, because this is the stock value going from was 110 to 180. And so kind of play with that one first. And part of that was getting our range, our gray shaded range in here, because that's showing our one standard deviation from the mean. And so we wanted to see all of it. And initially when I changed it, it wasn't showing that. So we needed to kind of firm it up here a little. Typically, these classes will be recorded and posted after we're finished, and this might be one you need to go back to, especially those of you that have not seen this tool before. Let's see. Is it possible to create alerts for price via risk profile tab? You cannot set alerts directly off the risk profile, but you could set some based off of some variables. Okay, you could set some alerts based off some variables. All right, Juan says, when we close the vertical before strike, does the chart show our profit? It will. In fact, we're going to get into that in just a moment. But I do want to answer, some of these basic questions that are coming in for those of you that are just seeing this for the first time. So I want to make sure we catch those. What's the ideal delta in this type of a trade, says JD? Well, back on our trade tab, what I was looking at here, we ended up selecting a 31 delta, and a 30-something delta can be pretty common for people. Some who want a higher probability of success might go a little further out of the money. Maybe they choose a 20-something delta. And there could be those that are like, I like having a little bit beefier return. I realize my probability of success won't be as high, but I do like a heftier return. And so you're the person that gets to balance that, okay? And so maybe a 40-something delta might be appropriate for somebody that's saying, I want a better return than I can get with a 30-something or a 20-something delta, okay? You get to decide. Generally, traders are going to look between a 30 to 40 delta, but you can kind of fine-tune that for what you personally like. All right. Rams wants to see a bearish trade. If we have time, we could do that. That's not actually part of my agenda here today, but it'll graph any kind of trade, right? I chose a short put vertical simply because it is a strategy that many of you are familiar with. If we had a bearish type of trade, what would you imagine the lines looking different? How would you imagine those lines looking different? Well, they might look more like something like this, where with the price of the stock going down, then it's up here where we're seeing our gain, and then we might have partial. And then as the stock gains money on a bearish trade, that's when we're going to be down here getting into our max loss area. So it's just going to kind of basically be flipped for us. And also that purple line, that would flip as well. All right. I hope that you guys are taking advantage of becoming a subscriber to our Trader Talks channel. Many of you don't even know about it. Some of you are just getting exposed to it. So I'm going to show you a couple of things with it. Now, down in the bottom right-hand corner of your screen, you can click on that subscribe button. It looks like a YouTube logo in blue, but just click it once. If you click it twice, it'll unsubscribe you. Okay, so just click it once. And when you become a subscriber here, let me show you a little bit what that looks like. It gives you really easy access to our content. Okay, so suppose you're saying, I want to go back and find this video again. I'm going to have to go through it. Okay, a couple of ways you'll be able to do that. One is by pulling up the playlist. We have a playlist for every class. So this class, managing an options portfolio, has its own playlist, and you'd come down and find it. And once it gets posted, it's going to be the first one in sequence. Okay, so you'd be able to find it pretty easily. Obviously, not posted yet, because we're not even done. Another thing with being on our Trader Talks channel, you can see some additional lists that we've created for you. And I'm going to share something that I'm working in a little bit, and that's called this bite-sized content. Sometimes we have 3 or 4 minutes, maybe 6 or 7 minutes. We're like, yeah, I can learn something in that period of time. Come over to our bite-sized content. One that I'm doing is I'm giving you some quick tips for Thinkorswim, some different functions of Thinkorswim you might not be familiar with yet. And some of them are basic and some of them are maybe a little bit more advanced. And so the most recent one that I did here was last week. And it was, quick tips for learning how to build some grid charts on the charts. Grid charts are multiple charts out in the chart area. Okay, so just know that if you become that subscriber, it makes it really easy for you to find our content. Now, I want to take you to the second tool, although we're not going to spend a lot of time on the second tool. The second tool is a trading journal. And if you're newer to a strategy and you're trying to figure out, do I do this strategy very well? Is it making money for me? And so forth. Sometimes that trading journal can be really helpful for you to track that information so you can kind of grade yourself and see how you're doing and see where maybe you need to make some changes. So I am going to flip over here to the Schwab page. So you've got to log into your Schwab account in order to get access to this. But then you're going to come over to our coaching area. Okay, so you're going to select on Learn and then come and select on here, Schwab Coaching. And what we're going to is the calendar so that you can see where we are in the calendar. If you're somebody that does a lot on the Schwab website, you can find us there too. Now I'm going to come down here and we're going to look at the calendar. We're going to go into live webcasts and virtual workshops. So I'm going to click on view calendar. And then this trading journal is not attached to all the classes. Okay, but it is attached to another class that I teach, which is short verticals. So I teach that on Thursdays at 2 Eastern time. Go ahead and that's one of the places you can select. Another place is in trading a smaller account. Okay, those are the couple places where it sits. So I'm going to go into my, get back on Thursday to my short verticals webcast. And then this is where you're going to see it. And I'm going to maybe highlight this in a little bit darker color here. Right down here are resources, and the trading journal is right there. And you'll be able to click on it, and it'll bring it into it'll download it to your computer, put it in an Excel spreadsheet. I cannot vouch for other spreadsheet programs. There might be others who can, but the one that we know that it works with is Microsoft Excel. There are also a couple of videos to help you learn how to use it. Okay, So again, it's just something that can be really helpful to you. Now, I'm going to just show you the look of the trading journal here. I already downloaded it a little bit earlier, okay? And so the first tab has some information, and second tab has instructions. How do you really use the journal? And then there's a tab here. It says strategy 1. So if you're, say you're doing a long call, long put, short put vertical, whatever. Actually, short put vertical I wouldn't do here. I would use the verticals tab when you're doing some spreads. Okay. It has calculations in here a little bit more detailed that are helpful when you're trading spreads. But for some of your basic strategies, you might find this is just absolutely sufficient. Okay. So that's the trading tool number 2 that you've got access to. Some of you might not have even known that it was available to you. Yeah, Suptra says, yeah, I didn't know about that. Yeah, exactly. What can we do if a trade goes against our plan, i.e. if the underlying asset starts to go down in value? I think, Marcus, you're talking about the trade we were talking about, right? What if Datadog doesn't do what we expect? Well, that would get into more strategy, right? Let's go back here to, let's go back to the chart here on Datadog. One could be actually on the Analyze tab if you're looking at your probabilities here and you're seeing, it's not working so good for me. Maybe there's a cutoff line that you have. Maybe if there's only a 30% chance it's going to work out in your favor, maybe you use that as an exit. Technical traders, and I like to do it based on the charts myself, might look at this and say, all right, it broke out above this resistance level. If it has a significant close below it, not just dipping its toe below, because we know this is a range, but if it has a significant close below it, then yeah, we might choose to either try to adjust the trade or we might choose to just close it down altogether. Kind of depends on the circumstances of what you're seeing, why it's down, what you think the stock is likely to do. Yeah, you really don't want to mess with trying to change it just if you're getting a little nervous. Okay, getting a little nervous does not count. Okay, we want to trade what we see and have some idea. Yeah, if it really closed significantly below here, or maybe below, say it dropped down below the 10 and broke that support area, yeah, somebody might be inclined to do that. All right. Now, the trading journal is not connected in any way to Thinkorswim. It's an independent tool. You got to be the data putter. Okay, you get to plug your information in there, and those of you that are doing some real active trading, it can be a little bit of work. Okay, but if you're trying to figure out, say you're like, I'm trying this new strategy, and I don't quite get it, so I'm going to do maybe like 5 trades. And so you go ahead and you put in the 5 trades, and you're tracking them. Then it can help you evaluate maybe where some mistakes are and what you might do differently as you're learning that strategy. But if you don't track the data on it, it makes it a little difficult for you to know if you're having success with that strategy or not. Okay, but no, they're not linked together whatsoever. Can the journal pick up the trade automatically? Okay, I've got a couple of those. So how do you get the Excel file? So let me just show you one more time. I'm going to go back to the Schwab website. I went into Learn, and I went into Learn, and then we went into Coaching. And then off of Coaching, I chose the webcast. Let me go back a screen. I said, let's go view the calendar. In that very first far left column, view the calendar. And then I came down to where I knew it was sitting. Okay, and it's sitting right now in short verticals and trading a smaller account. And so I went to short verticals, and you just click on it right there where it says trading journal. Okay, it's just a little link there by the resources. And when you click on that, what it's going to do, it's going to download it. Mine went to my upper right-hand corner of the screen because that's where my downloads go. And so you would go and find it from there. So I will just show you here real quick. If I go and select on it, that actually is not showing it. Let me go ahead and just click, And then it's actually this little area to the right of that, okay, is where my downloads are. Pull that up. You can see I've downloaded it 3 times this morning. That was the 3rd time just now. So then you pick it off of this area. Yours may look a little bit different. You know, mine on my browser, I look for the down arrow and the little kind of that bar on the bottom. The down arrow kind of gives you your key. This is something you downloaded. Okay, so that's where you go find that. Sharon's given us some information here. Sharon says, you know, the Trading Journal is very easy to use. Sharon, appreciate you sharing that with people so they don't feel intimidated. It's like, yeah, we can probably craft that out. Yeah, you don't have to take notes on paper anymore. Absolutely. Mighty Quinn wants to know, can I add my own columns in the Trading Journal? Yes, you may. One thing I might suggest to you, though, is to leave the original intact. Make a copy of it under another name so you can go in and experiment with it and put in some additional data, but always have the original one you can go back to in the case you might make a mistake or something that you wipe out a formula and you're like, oh, scrud, have that original one out there. All right, let's show you. We're going to go back to the Analyze tool here. I'm going to show you how you can use it with existing trades. Now, this could be helpful as you're managing your portfolio. Now, let's start out with a trade in this portfolio. It's down here at the bottom. It's an Uber. And it happens to be a ratio spread that's going on. And we can use the risk profile tool to see what's going on here. So just kind of some data, just so we know right now we're down on the trade about 163.5. We have 16 days left before these options expire on October 17th. Okay, so we have a little bit more time in the trade for this to work for us, but let's show you how you might see it on the risk profile. So we're going to go back to our Analyze tab, and up here, I'm going to type in Uber, E-B-U-R, U-B-E-R, and remember down here I had put hide positions. Now I just want to hide any simulations. Or I could put it at show all, although this is going to need a little bit of adjusting here. A lot of adjusting here. This did not look like this earlier. Let's see what's going on here. If we can add a simulated trade, but this is our actual trade. Did I pick the wrong one? No, this is our ratio. Our ratio spread. Let's see, Uber currently is at about $97. And I'm going to have to come in here and I'm just going to do this. The scale on the bottom is way off. So I'm going to come up here. Let's do a couple of things. One, we're going to reset the date for the date up in the upper right-hand corner. It's not the 24th of October. This one is actually the 17th. So we're going to pick the 18th here. We're going to go ahead and set prices to the break even. Set slices to break even. The problem is my scale is off. Okay, you can see down here I've got going from 100 to 900. And that is not even close to what's going on here. One leg, that's if we only wanted to see the other leg. Let me see here. I am not sure why it's not graphing this. I apologize. Let's try a different trade. The other one I was thinking we could look at here is UNH. Now, UNH is a synthetic trade. Let's open up. Where did it go? UNH right here. So we have a long call and a short put. The idea with this kind of a trade is that you're going to create a delta of 1. Well, a stock with one share is a delta of 1, and it's a linear relationship. Okay, and so if we come over to the risk profile here, and we've got UNH up, looks like 350 is the strike price we're working with. So we do see 350 down here, but the pink line and the blue line are just running together really closely. This would look similar to what you might see if you put a stock position in here, okay? but you can still come in. It put in the correct date here, December 20th. Come over here. We can do our set slices to the break even based on the options expiration date. So we're going to pick the 20th here. And then I'm going to click and drag this on the bottom because I want to be able to see the entire gray area that represents one standard deviation from the mean, or where 68% of the data points are. Now on this trade, what we're seeing here is the break-even point here looks to be about 355.67. Kind of have to turn your head a little bit to see what that break-even amount is. But let's see what the probabilities are looking like right now. So this side over here says 60%. So that's saying basically there's a 60% chance that the price of the stock is going to be between the break even of 355 and change or lower, and a 39% chance of being at the break even point or higher come options expiration date. So somebody might look at that and go, I don't know that I like those odds, right? And so that could be one thing that you might look at to determine I might want to close the trade up. Again, somebody also might go to their technical analysis. All right, their technical analysis. Let's get rid of those drawings here. On UNH, when this trade was entered into, was looking fairly bullish, right? They had a really interesting earnings report, gapped up. Hasn't moved a lot from that period of time since it initially gapped up, but there's a lot of time left on that trade. Those are December contracts, okay? And so if you saw a significant break of, say, for example, on this one, this area should be acting as a decent area of support. We can use the bottom of the gap here to identify that. And it looks like so far it's staying above it. Okay. So maybe there's not a technical reason to be out of the trade yet. And maybe you want to give a little bit more time. The one thing you have to keep in mind with the synthetic is that long call, it'll experience the time decay. The short put will kind of help offset that, but we still would want it to move directionally up and not count on the time decay offsetting each other. They'll be similar, but not exactly the same. Let's see here. What is the ratio spread? Paul says, because that was the trade that I had brought up here initially for us to see here. If I go back to the monitor tab, a ratio spread is where we have an even number of contracts. So on this one, we have 2 call contracts that are long and 1 short contract of a call right here, but they're not the same quantity. This one is a 1, this one is a 2. Okay, it's kind of an advanced strategy. Brent teaches advanced option strategies. I believe it's on Thursdays. And so this is one of the trades I think that he has been using in his example account for that particular class. Now, somebody was thinking that back on my dates here, that the date needed to be set to October 24th. That may or may not be the case. I'm not positive. Okay. But it should, if you come over here and if you have a trade in there, it should pick it up. I'm going to try to find another one. What's this one? This looks like 100 shares. And a long put, kind of a hedge in there. We could also maybe look at, let's maybe just pop in Cisco here. It's a trade that's going on. It looks like, oh, maybe an iron condor going on here. 63.64 on the put side, 70.71 on the call side. So that could be an interesting one. If we go to the Analyze tab, and let's see if this will come up better than my Uber. Put in SCSO, Cisco. And I'm going to just say hide any simulations. So just show positions. It's being a little goofy on me, and I apologize because as I was going through reviewing which trades we might want to use, we're working just perfectly here. This expiration date we'd want to change to the 18th because that's going to be the Saturday following October 17th. 63, 64, 70, those numbers are appearing down here. So I apologize, but you can use it for that as well, okay? In any case, if this is a tool you're not familiar with, I'm going to give you a challenge, maybe on your next couple of trades that you decide to do. Set them up here on the trade tab, right mouse click, go to analyze trade, and maybe do it from the get-go, see what you can learn from it, look at it a few days later, see how the graph has changed, okay, on that particular trade that you're working on. And then the other thing is if you're at a point you really want to know what strategies are working well for you, download that trading journal, start tracking it. It is a little bit of work, but a lot of people who have used it in the past have really said, man, that really has helped us out. Well, you guys, fantastic. So happy you took the time to be here today to this webcast. Hopefully this was helpful for you to give you some additional tools as you're managing your option strategies. Ben, thank you so much for helping in the chat. Just remind you, follow Ben and I on X. Make sure you subscribe to our Trader Talks channel because we want to have access, have you find our access. All right, you guys, coming up next, Price Patterns by Barbara Armstrong. We're going to take a little break. It's going to start right at the top of the hour. Thank you, everyone. Have a good day. Bye-bye.